Australia now has some of the most unaffordable housing in the world. Not just compared to the past, but compared to almost every developed country today. People with stable jobs, good incomes, and years of savings are finding it harder than ever to buy a home. For many Australians, owning a home no longer feels delayed. It feels impossible. And this did not happen suddenly. It did not happen by accident. In this video, we are going to break down exactly why Australian housing became so expensive, how the system ended up this way, and why affordability may not return anytime soon. This is Southern Markets. For most of Australia's modern history, buying a home followed a predictable path. You worked, you saved, and eventually you bought a place to live. Home ownership was not guaranteed, but it was realistic. That reality has changed. In cities like Sydney and Melbourne, the median house price is now 8 to 10 times the average income. In previous decades, that number sat closer to 3 or 4 times income. This difference matters more than almost anything else. When house prices grow faster than wages for long periods of time, affordability does not slowly decline. It collapses. Wages in Australia have grown modestly. Housing prices have grown dramatically. The result is a growing gap between those who already own property and those who do not. And for younger Australians, that gap feels permanent. So how did Australia reach this point? The first major reason is cheap money. For decades, interest rates in Australia trended downward. Borrowing became easier. Monthly repayments appeared manageable, even as loan sizes grew larger and larger. Banks did not ask whether a home should cost a certain amount. They asked whether a borrower could service the loan at the current interest rate. This distinction is crucial. When interest rates fall, buyers do not reduce how much they spend. They increase how much they borrow. Lower rates increase purchasing power, but they also increase competition. More borrowing power allows buyers to bid higher, and when many buyers do this at the same time, prices rise. Cheap money does not make housing affordable. It inflates asset prices. As prices rise, buyers take on more debt. As debt increases, the system becomes more sensitive to interest rates. This cycle continued for decades. Today, Australian households carry some of the highest debt levels in the world relative to income. Housing is the core reason. The second reason is supply, or more accurately, the lack of it. Australia is a large country with plenty of land, but housing supply is not determined by land alone. It is determined by rules, approvals, zoning, and infrastructure. In many cities, density is heavily restricted. Planning approvals can take years. Infrastructure often lags behind population growth. The phrase "just build more houses" sounds simple, but in practice it is anything but. In many areas, it is easier to renovate or extend an existing home than to build new housing at scale. Meanwhile, population growth continues and household sizes shrink. More people need more homes, but supply struggles to keep up. When demand grows faster than supply, prices do not stabilize. They rise. This dynamic has been present in Australian housing for years, quietly pushing prices higher even when economic conditions weaken. The third reason is housing as an investment. In Australia, housing is not treated only as shelter. It is treated as a financial asset. Policies like negative gearing and capital gains tax discounts reward property investment. These incentives encourage investors to enter the housing market, often competing directly with first home buyers. As a result, buyers are no longer just competing with other families. They are competing with investors, tax structures, and expectations of future price growth. Once housing is widely seen as a reliable way to build wealth, demand becomes self-reinforcing. People buy not only because they need a place to live, but because they fear being locked out permanently if they wait. This fear pushes demand forward, even when prices are already high. Over time, this changes the nature of the market itself. Housing becomes less about affordability and more about returns. The consequences are uneven. Young Australians face higher barriers to entry. Renters face rising costs and insecurity. First home buyers compete against systems designed for investors. Meanwhile, those who already own property benefit from rising values. This creates a widening divide based not on income or effort, but on timing. Home ownership was once a milestone of adulthood. Now it increasingly feels like a dividing line. For many Australians, renting is no longer a temporary stage. It is a long-term reality. Australia did not stumble into this housing situation. It was shaped over decades by interest rates, supply constraints, and policy incentives that favored asset growth over affordability. Cheap money inflated prices. Restricted supply locked them in. And investment incentives pushed them higher. Unless these underlying factors change, affordability will not return simply because people want it to. If you want clear, data-driven explanations of Australian housing and markets without hype or noise, subscribe to the channel. More analysis from southern markets is coming.